All right, hello, and welcome back to the Broken Business Models podcast. We're your hosts, Ryan and James. And before we get into today's podcast, just a quick disclaimer: nothing in this podcast or any of our other material should be taken as investing advice. We frequently talk about risky strategies and investing topics that maybe carry a little bit more risk than other channels. So just make sure you do your own research and consult a professional before making any investment decision. So, with that being said, the topic of today's podcast is actually a request from one of the members of our Discord community. So, if you don't already know, if you are a premium subscriber to our website, differentiatedanalytics.com, when you sign up, you get an email to inviting you to join our Discord community, where you can one of the things you get is you can request video topics on this podcast. So this particular topic was a request that was, how do we, from a start to finish, from start to finish, what is the process of looking into and researching a stock that is a potential investment opportunity? So we're going to go through that in today's podcast with a specific example of looking at MicroStrategy, which is interesting for a number of reasons, but all in all, it gives a good example of what the type of things to look at when going through your investment research process. So with that being said, I'll kick it over to you, James, to explain the process and specifically for MicroStrategy.
Yeah, so MicroStrategy is a bit of an interesting company because, as if you don't already know, it's run by Michael Saylor, and MicroStrategy used to be, well, it still is a enterprise software company, but currently it's best known as a Bitcoin company because in 2020, Michael Saylor, the founder and CEO, decided to invest some of their corporate cash into Bitcoin. And since then, he's kind of gone all in, spending all of the company's cash to buy Bitcoin. In fact, they've also raised debt and issued new shares to raise money to buy even more Bitcoin. So currently, MicroStrategy owns a huge stockpile of Bitcoin, which is the majority of the company's valuation today is its Bitcoin holdings, as opposed to the software business. So in today's video, we'll go through how we go about analyzing a company like MicroStrategy. So how do we value the software business itself? How do we value their Bitcoin holdings? And then altogether, that would, we would kind of come up with, a price target of how much we think this stock should be worth versus where it's trading today. So the most important thing to do when you're looking at, when you begin looking at any company, is to first figure out what the company actually does. And that can be pretty difficult with a lot of software companies because if you go on the websites, especially the investor relations website of, a lot of these enterprise software companies, they'll give a very vague description of what they do. Like, for example, here, this is from MicroStrategy's website. They say that, MicroStrategy One platform provides AI-powered workflows, unlimited data sources, cloud-native technology, and unparalleled performance for you to speed up time from data to action. So just reading that description, it's kind of vague. It's, something to do with data, something to do with AI-powered workflows, but like, what do they actually do? And I've found the best way to figure out what, software companies actually do is to go on YouTube and try to find a tutorial of somebody, explaining how to use the software. So I was able to find this YouTube tutorial. And basically what the MicroStrategy platform does is you can input a bunch of data about basically whatever you want, and then create an interactive charts or maps to visualize the data and do some analysis on it. In the example here, they're looking at the prices of a bunch of Airbnbs in a given city. So if you have a bunch of pricing data and a bunch of listing data of Airbnbs, you can import them into the MicroStrategy platform and create an interactive map of all of these Airbnbs, and say if you're a company that's maybe wanting to like invest in real estate in this city or whatever the case may be, this kind of map could be useful to you. So basically, it's a tool that businesses use to collect various data that they have and create an interactive chart or map that can help them make business decisions. And there are a lot of software companies that make similar softwares as MicroStrategy, and it's a very competitive space. But now, just by looking at a YouTube tutorial, you can at least understand what MicroStrategy software actually does. And the second piece of the puzzle for MicroStrategy is their Bitcoin holdings. They have been buying Bitcoin since 2020, and they've accumulated a large number of Bitcoins. And as we will see later in this video, the vast majority of the company's current market valuation is related to the Bitcoin holdings, and the software business that they have only represents a small portion of their valuation today. So we're going to start off by, analyzing the financial performance of the software business. So we can look here at their revenue, just from their 10K. Over the past 3 years, their revenue has actually declined from $510 million or $511 million in 2021 down to $496 million in 2023. So over the past 2 years, revenue has declined by 3%. And MicroStrategy, it's a very mature company. I think it was founded, all the way back in like the late 90s or maybe early 2000s. So it's like a 20-some-year-old company. And the enterprise software space is extremely competitive. There are tons of other companies that make similar data analytics tools as MicroStrategy. So given, the competitive environment and the fact that, they've already been around for such a long time, they're having a hard time growing their revenue, and the revenue has actually been declining slightly. Their gross profits over the past 3 years, the gross profit margin, if you just take here the gross profit divided by the revenue, in 2021, the gross profit margin was 82%, and by 2023, that has declined to 78%. So their gross margins have been getting worse. But I mean, they're still very high, which is what you would expect from a software company. But more concerningly, their operating profits have declined substantially over the past 2 years. So if you look at their operating costs here, they have sales and marketing, research and development, and general administrative costs. These are regular expenses that every company has. But they also have digital asset impairment losses. So basically, based on how GAAP accounting works, when you own Bitcoin on your balance sheet and the value of that Bitcoin, the price of Bitcoin declines in a year, you are required to recognize an impairment on the value of your Bitcoin. And that causes that's technically called an operating loss. But we're going to value the Bitcoin separately, so we're going to exclude these digital asset impairments from our analysis. And after excluding these digital asset impairments, MicroStrategy made $46 million of operating profit in 2021. But in 2023, their profitability had declined significantly. And in 2023, they only made $800,000 of operating profit. So they barely broke even in 2023. So their profitability has deteriorated. So how much is the software business worth? So this is, a business that generates about $500 million of revenue per year and is barely breaking even as of 2023. So if we look at MicroStrategy's market cap in 2019, so remember that they started buying Bitcoin in 2020, and the Bitcoin on their balance sheet has been a huge driver of the valuation. But if we look at them from 2019, that's before they bought any Bitcoin. So then it was just a software business. How much was it worth at that point? Well, in 2019, their market cap was about $1.5 billion. But now the revenue is declining and the profitability has collapsed in 2023. So if anything, the valuation of the software business should probably be lower than $1.5 billion today. But for the sake of simplicity, let's just assume the software business is still worth $1.5 billion, which is roughly what it was valued back in 2019. And so now we've looked at the software business. So now it's time to move on to their Bitcoin holdings. How much Bitcoin do they own, and what valuation does that translate to as far as their stock price? So if we go into their 10K, this is their 2023 10K. They disclose some information about their Bitcoin holdings, and as of December 31st, 2023, they owned 189,150 Bitcoins. So, but that was as of December 31st, 2023. Since then, they actually have bought a lot more Bitcoin. So in these two press releases down here are both from March of 2024. So they raised a $600 million convertible bond and also an $800 million convertible bond. So in March of 2024, they raised a total of $1.4 billion, and they used those proceeds to buy more Bitcoin. And here you can see this CoinDesk article here. After doing those two convertible bond offerings and using the proceeds to buy Bitcoin, they increased their Bitcoin holdings up to a total of 214,246. So this is the total amount of Bitcoin they have as of today, and that's what we'll be going off of for our analysis. So in addition, to considering the assets they have, which is the Bitcoin, we also have to consider all of the debt that they have, because the only reason that they've been able to acquire so many Bitcoin over the past few years is because they've raised a lot of debt in order to finance those. So how much debt do they have? Well, here is also from their 2023 10K. It shows the various debts that they have. Which adds up to a face value of about $2.2 billion. But remember, they also raised subsequent to the end of 2023. So in March of 2024, they raised an additional $1.4 billion of convertible notes. So I've included those here in this chart, and their total debt has now increased to $3.6 billion is the face value of their debt. But MicroStrategy's debt is a little bit more complicated than regular debt because a lot of it is convertible. So a convertible bond is a bond that functions kind of like a normal bond, as in there's a principal amount, there's an interest rate that you have to pay, and then at some point it matures, and then MicroStrategy has to pay back the principal amounts of the bond. But the convertible debt, in addition to that, the bondholder has the option, but not the obligation, to convert their principal into MicroStrategy shares at a certain strike price. And you can think of it sort of like a call option attached onto the bond. So let's say we'll take the example of one of these, the 2025 convertible notes. So those are one of their tranches of convertible notes that matures in 2025. This has a strike price of $398 per share. And so this note is what they issued. They issued this note a few years ago, back when MicroStrategy stock was a lot lower than it is now. And this convertible bond is massively in the money because as of the time of recording this video, MicroStrategy's share price is over $1,200. So the bondholder, when this note matures in 2025, they're not going to ask for their principal back. Instead, they're going to convert their principal into stock at a valuation of $398 per share. And because now that the share price is so much above that, the value of that stock that they convert is way higher than the principal amount. So whoever owns this convertible bond is going to make a huge profit. So that's kind of how convertible bonds work. So MicroStrategy has currently has 4 tranches of convertible bonds. One due in 2025, that's this 398 strike price. Another due in 2027, which has a $1,400 strike price, which is a bit higher than the current share price. And then these 2 convertible bonds that they just issued in March of 2024, those have strike prices of $1,500 and $2,300 respectively. So those are higher than the current share price. So those ones are not in the money. Of their 4 tranches of convertible bonds, only this first one is currently in the money. So how many shares would they have to issue? And you calculate this by taking the face value. The principal value of the bond is $650 million. Divide that by the $398 stock strike price, and MicroStrategy will have to issue 1.633 million new shares, to satisfy this once it is converted. So that's how, the share count will increase once these bonds are converted. And that's something we'll have to consider in our analysis. So based on that, based on everything we've talked about so far, how much should MicroStrategy be worth? So, first, what is the value of their Bitcoin? So they have 214,000 Bitcoins. As of the time of recording this video, each Bitcoin, the price of Bitcoin is $64,000. So we multiply those two together. The value of their Bitcoin holdings is $13.7 billion. And then how much is their software business worth? We said it was worth $1.5 billion, which was the same as its valuation back in 2019. So here we can see that the value of their Bitcoin is almost 10 times greater than the value of the software business. So really the vast majority of the value of MicroStrategy is just its Bitcoin holdings. And then we also have to subtract their debt. So they have $3.6 billion worth of debt on face value. But we have to remember there's that 650 million, which is in the money, so it will be converted. They have $2.95 billion of debt that is either non-convertible or not in the money. So we would expect, the market, based on these, we would expect the market cap to be the value of the Bitcoin plus the value of the software business minus the value of the debt. So that would be about $12.25 billion. And then we would have to also adjust for the 1.6 million new shares that they're going to have to issue when the convertible bond converts. But, just based on these numbers, we would expect the market cap to be roughly $12 billion would be a fair valuation for MicroStrategy's market cap. Well, if we just look on Google, Google is telling us that it has a $22 billion market cap, which is almost double what we thought their fair value should be. Now, Google is usually pretty reliable when it comes to market cap data, but it never hurts to just go into the financial filings and calculate it yourself. And so how you would do that is you would go into the financial statements and go to the consolidated statements of stockholders' equity. And here it tells you, as of December 31st, 2023, how many shares they have outstanding. So currently they have 23.6 million Class A common stock. They also have almost 2 million Class B convertible common stock. So in the case of MicroStrategy, the Class B convertible common stock, it is economically identical to the Class A common stock. The only difference is the Class B stock has 10x more voting rights than the Class A stock. And I believe most of the Class B stock is owned by Michael Saylor, and that gives him, a super, that gives him a voting majority, despite the fact that he only owns less than 50% of MicroStrategy. I think he only owns about 10% of the company's stock, but because he owns these Class B shares, which have 10 votes each, he has voting control over the company. But, for our purposes of this analysis, we're not really concerned about the voting rights. We're just concerned about the economic interest of the different shares. And the economic interest of a Class A share is identical to a Class B share so we can just consider them as the same. But then you also have to look at the treasury stock. They have 8.7 million shares of treasury stock. Now, treasury stock is this is when a company buys back its shares. Um, they buy them from the public, and those shares technically sit in the treasury within the company's treasury stock. But for practical purposes, we can kind of say that those shares have been deleted because nobody owns them, so they don't really have an economic interest in the company. So we have to subtract this treasury stock to get the actual number of shares outstanding and owned by the public. So if we, add all these together, subtracting the treasury stock, we get 16.9 million common shares outstanding for MicroStrategy. So here we'll do a MicroStrategy valuation. So there was 16.9 million shares outstanding. But remember, we talked about there was that convertible note, which is in the money. And then so in 2025, when that matures, MicroStrategy will have to issue 1.6 million additional shares to those bondholders upon conversion. So we have to add that, and then we get our adjusted share count of 18.5 million shares. And currently, MicroStrategy's share price at the time of recording this video was $1,274. Multiply that by the adjusted share count of 18.5 million shares, we get a market cap of $23.5 billion. And so all of these numbers here are in thousands. So this is $23.5 billion. So now we have to look at the value of the debt. The face value of their debt is $3.6 billion. But remember, we have to subtract that $650 million of convertible debt that's in the money because that's going to be converted. So that brings us down to $3 billion of debt. So how much? Now we have to look at the assets to see what is MicroStrategy's net asset value, right? They had the $13.7 billion worth of Bitcoin at today's prices, plus the $1.5 billion for the software business. That means the total value of MicroStrategy's assets is $15.2 billion. And then we will subtract the $3 billion of debt. So MicroStrategy's net asset value is $12.2 billion. So now we compare the market cap to the net asset value to calculate the premium to NAV. And in this case, if you take 23.5 divided by 12.2, you get a premium of 92%, which means currently MicroStrategy's market cap is 92% greater than their net asset value, which, you could probably say that the stock is absurdly overvalued as it's almost double the value of its NAV. So how would this, translate to somebody who is thinking about making an investment in MicroStrategy, hypothetically? So presumably anybody who would want to buy MicroStrategy stock wants to get exposure to Bitcoin because that's, really their main thing is, being a Bitcoin company. So let's compare two different options. Say you make a $100 investment into MicroStrategy stock, or you just make a $100 investment just buying Bitcoin itself, which these days is extremely easy to do because you can just buy one of these Bitcoin ETFs. So if you make a $100 investment into MicroStrategy, you're effectively buying $58 worth of Bitcoin, $6 worth of a software company, and then the company also has $12 of debt. This is all proportional to your $100 investment into MicroStrategy stock. So then the net asset value is $52. And then say you invest $100 into Bitcoin, well, then that's very simple. Your net asset value is just $100 of Bitcoin. So let's look at the various potential outcomes for the Bitcoin price and see if you would ever be better off buying MicroStrategy stock. So these are the potential outcomes? Let's say, 5 years or 10 years from now or whatever, the price of Bitcoin is, either down 75% from the current value, or it's up 1,000% from the current value, or really anywhere in between. In any of these scenarios, would the investment in MicroStrategy outperform the investment in Bitcoin? If the price of Bitcoin increases 1,000%, that $58 of Bitcoin will increase to $640. So, see, in this best case scenario, the net asset value of your MicroStrategy investment would indeed increase to $634, which is greater than your $100 initial investment. So, you would have indeed made money. But had you just invested in Bitcoin instead, you would have made way more money because you got more Bitcoin per dollar invested, right? Because here you only get $58 of Bitcoin exposure. But if you just bought Bitcoin directly, you would have gotten the full $100. So you'd make way more money in the upside scenario. In the downside scenario, Bitcoin declining by 75%. Obviously, if you just bought $100 worth of Bitcoin, that would be worth $25. But if you bought $100 worth of MicroStrategy, the net asset value would decrease down to $8. So you would still be better off if you had just bought Bitcoin instead of buying MicroStrategy. So really, in any possible outcome, an investment directly in Bitcoin will do better than an investment in MicroStrategy, assuming that MicroStrategy will eventually converge to its net asset value. So, given that this is the case, why would anybody own MicroStrategy stock? Given that if you're bullish on Bitcoin, you would be better off just buying shares or just buying Bitcoin itself, or maybe buying a Bitcoin ETF. Why would anybody buy MicroStrategy? Well, so here, this chart on the bottom comes from a website called mstrtracker.com. So this is a website that literally all it does is keep track of MicroStrategy's share price and how many Bitcoins it owns. And then it calculates basically the premium or discount of MicroStrategy's market cap divided by the amount of Bitcoin they own. And when MicroStrategy first started buying Bitcoin in 2020, there was a huge amount of hype, and then the value was, up to 6 times. MicroStrategy's market cap was up to 6 times its net asset value. And it's important to remember at this time, there were no Bitcoin ETFs available. So people who did not want to, go through the trouble of buying Bitcoin directly, really the only option they had for a pure play Bitcoin exposure was to invest in MicroStrategy stock. And that would potentially explain, why there was such a massive premium, because there's really no other way for a lot of people to gain exposure to Bitcoin. But then, and also there was a general, Bitcoin crypto mania around this time. And then, gradually the premium started to decrease. I think this happened for, a couple of reasons. One of which was because MicroStrategy was issuing a bunch of new stock to buy more Bitcoin. And as they were basically taking advantage of the premium to issue more stock. And as the supply of stock increased, the premium came down because there was, less just based on the supply demand dynamics. And then so by around 2021, the premium went down to 0. So it was just at 1 times its NAV. And then here in 2022, as the Bitcoin price was collapsing, MicroStrategy stock actually fell below NAV. So it's trading at a slight discount to NAV. But it recovered slightly, and then throughout most of 2022, or throughout the end of 2022 and most of 2023, it was trading pretty much exactly at NAV. But then in 2024, when we've had this big Bitcoin rally and all the hype around the ETFs and the halving, etc., MicroStrategy's price skyrocketed again, and now it's trading at a massive premium to net asset value. So it appears that the MicroStrategy premium seems to be correlated with the general sentiments in the crypto markets. When there's a crypto bull market, people get excited, maybe irrationally so, and will just blindly buy shares of MicroStrategy, pushing its price up to values above what could be justified by their net asset value, and vice versa. So that that kind of appears what's happening with MicroStrategy's premium to NAV. So, is there any fundamental justification that MicroStrategy should be trading at a premium to the value of its Bitcoin? And I'll play here a short clip of Michael Saylor answering exactly this question in a recent interview on CNBC.
What's going on here? MicroStrategy's got leverage. If we borrowed $800 million at 62 basis points, is there any company in the world that you wouldn't like to invest in that could borrow $1 billion at less than 1% interest to invest in your best idea? So we get that very intelligent leverage. It's non-recourse, it's unsecured, and then we buy Bitcoin with it. That leverage gives us volatility. It gives us performance. The performance gives us volatility. The volatility attracts capital, and we can then leverage more. It's kind of intelligent because it's convertible debt. It's given our shareholders more Bitcoin per share this week than they had a few weeks ago. So it's very accretive for them. And it's pretty compelling for every investor. If you're Bitcoin curious right now and you want to buy Bitcoin at the all-time high, how do you get the upside in Bitcoin with downside protection? MicroStrategy sold $800 million in debt, and we have $13 billion of Bitcoin on the balance sheet. So we're giving you an over-collateralized loan and the upside. But if you're a Bitcoin maximalist and you love Bitcoin and you want to hold it forever, the ETFs charge you 25 basis points. MicroStrategy is accreting. We're giving you a yield against your shares in a tax-efficient fashion. So the maximalists like the equity. The hedgers, they kind of like the upside with downside protection. The traders love the vol. We've got 100 vol asset here, and they just like the vol. So we're unique because you can't really trade options on the ETFs. And an ETF isn't going to issue a convertible bond with upside to Bitcoin, but downside protection.
So according to Michael Saylor, MicroStrategy deserves to trade at a premium because they have the ability to borrow money. They have the ability to issue bonds to borrow money to invest in Bitcoin at cheap interest rates. And that allows them to accumulate more Bitcoin. And he is obviously bullish on the price of Bitcoin. So eventually, as the Bitcoin price rises, they will benefit because they were able to buy so many Bitcoins with cheap debt. Okay. And the second thing is, he says, if you buy Bitcoin, one of these Bitcoin ETFs, you have to pay an expense ratio. The expense ratios are actually quite low. I think the expense ratios on some of the Bitcoin ETFs are as low as 0.2% per year. But I mean, it's still something. And then he says MicroStrategy charges no expense ratio. And he said instead of charging an expense ratio, they actually generate a yield. So what is Michael Saylor talking about that MicroStrategy generates a yield on the Bitcoin? Well, what he's saying is that because they can because they can issue debt to buy more Bitcoin, this means that their amount of Bitcoin increases. So if you're an investor in MicroStrategy, over time, the amount of Bitcoin you indirectly own will increase as MicroStrategy increases its own Bitcoin holdings. And then finally, he says that MicroStrategy stock is very volatile and traders like volatility, which I don't really understand the point he's trying to make here. It is true that MicroStrategy stock is very volatile, and maybe there are, day traders that like to trade on this volatility, but I don't see how that could provide any, justification for MicroStrategy trading at a premium to NAV. So that really makes no sense. I have no idea what Michael Saylor was trying to get at with that point. But let's look at this, his first 2 points, saying that because MicroStrategy can borrow money to buy more Bitcoin, this will create a yield where their amounts of what he calls a yield, where their amounts of Bitcoin will increase over time. So this is a chart also from mstrtracker.com, and it shows that their amounts of Bitcoin per share. This is the number of Bitcoins that MicroStrategy owns divided by the total number of MicroStrategy shares outstanding. So this basically shows you, if you buy a share of MicroStrategy, how many Bitcoins are you indirectly owning. And then so obviously when they started buying Bitcoin back in 2020, this number was increasing, very quickly because they were, starting from 0 Bitcoins and then using all their cash to buy Bitcoin. So this increased a lot. But by the end of 2021, they were basically fully invested. They had spent all of their cash that they had previously to buy Bitcoin. So the only way that they could buy more Bitcoin is either by raising capital, either by issuing new shares or by issuing debt. And MicroStrategy, in addition to raising debt, they've also issued millions of shares of new equity. They've done equity raises and used those proceeds to buy more Bitcoin. So that indeed increases the amount of Bitcoin they own, but it also increases, the denominator of how many shares are outstanding. So just issuing shares to buy more Bitcoin is not going to increase the Bitcoin, may or may not increase the amount of Bitcoin per share, because the denominator is also increasing. And as we can see, since September of 2021, they had 0.012 Bitcoins per share. Currently, they have 0.01215 Bitcoins per share. So it's been a very marginal, like a tiny increase in their Bitcoin holdings, like a 1% increase of their Bitcoin per share since 2021. And actually, their amounts of Bitcoin they own has increased a lot more than that. But because they've also issued a bunch of shares during that period, the Bitcoin per share has barely budged. So that kind of goes against, MicroStrategy's argument that they're generating a yield, so-called, by buying more Bitcoin over time, because the Bitcoin per share has, barely budged over the past, 2.5 years. So overall, I can't really see any justification of why you would pay a 92% premium to buy MicroStrategy stock when you could just buy a Bitcoin ETF or buy Bitcoin directly and pay a 0% premium. And, especially seeing as Michael Saylor's arguments about, the yield and increasing the amount of Bitcoin they have seems to be a bit overhyped, given, their inability to increase Bitcoin per share over the past couple of years.
So one of the things that I think is really important in like a general investing research process is like try to pressure test and find any potential way that your thesis could break. So for MicroStrategy, is there any conceivable way that you could justify the 92% premium, whether it be like based on their holdings of Bitcoin or their software business or anything else?
Well, I think the software business is extremely unlikely to ever justify the NAV because, or the current valuation, because it's, the revenue is declining. Their profitability has been declining over the past couple of years. And the value, we looked at, it had a $1.5 billion valuation compared to MicroStrategy's current market cap of 23 billion. So it's, it's the software business is too small to matter. So I think we can really disregard that. On the issue of the Bitcoin holdings, I think it's theoretically possible. Michael Saylor's statements about the yield, his argument about the yield, it's theoretically possible that if the value of Bitcoin increases, their net asset value increases. That allows them to use their Bitcoin holdings as collateral to borrow even more money. And then if Bitcoin keeps going up, they have even more collateral so that they can borrow even more money. And then over time, they can eventually accumulate so much Bitcoin. And if they're doing it by the use of debt instead of equity, that is non-dilutive. But And then eventually their Bitcoin per share could indeed increase theoretically. And if the Bitcoin price increases enough, that could close the gap with the premium to NAV. But there's a couple of problems with that. First of all, if we look at their debt, most of their debt is convertible. So in that upside scenario where we say the Bitcoin price is increasing and then that allows them to raise more debt, but most of their debt is convertible. So if that happens, all of these debt will convert into shares and the share count will indeed increase massively. Another problem with having all of this debt is it basically means that they are only able to buy more Bitcoin when the Bitcoin price is rising. Because when the Bitcoin price is rising, the value of their collateral increases, therefore allowing them to buy more debt. But if the Bitcoin price is decreasing, the value of their collateral is decreasing. So their debt to asset ratio will get worse, and then they won't be able to buy more Bitcoin. So, for example, back in 2022, at the end of 2022, when the Bitcoin price went down to $16,000, that would have been a really good time to buy Bitcoin in hindsight, right? You would want to buy low, sell high. But because they already had so much debt and their debt to asset ratio was getting really bad at this point because their asset value was decreasing, they were not able to borrow more money to buy more Bitcoin. But now that the Bitcoin price is increasing, now they can the value of their assets has increased enough that they can finally start issuing more bonds and buying more Bitcoin. So it basically creates a situation where they're forced to they can only buy high. They can't take advantage of periods when the Bitcoin price is low. So I think just from a trading perspective, their heavy use of debt could have some adverse consequences. And so maybe it's theoretically possible if they get really lucky and the Bitcoin price only ever goes up and they are able to issue a bunch of more bonds and just keep issuing more and more bonds and getting more and more Bitcoin, that could theoretically work in the long run, but it's extremely risky because they're building up this huge amount of debt. If we get a massive Bitcoin correction, they could even go bankrupt, or at the very least be forced to sell a bunch of their Bitcoins at the lows in order to pay down their debt. So it's a very risky situation. And I don't, given how risky that proposition is, I kind of find it hard to justify, paying a 92% premium.
My last thought is that probably a much better justification for the 92% premium is just like investor hype, especially given Michael Saylor's personality and his large presence both on social media and the regular business media. You mentioned going back to 2020 before the 2021 and more recent Bitcoin huge surges in the price. Like he was bullish on Bitcoin before those price increases, right? So just his like personality and being such a big name in the crypto and Bitcoin communities seemed like much more plausible of an explanation for that massive premium to NAV.
Yeah, basically the people who are buying MicroStrategy stock, they're not necessarily, doing these NAV calculations like we have done and thinking of some way how this is actually a good, investment on the fundamentals. They're probably just saying like, oh, this is Michael Saylor's company and Michael Saylor is like such a legend within the Bitcoin community that therefore it must be a good investment to buy his company. But one person who maybe doesn't think it's such a good idea to own MicroStrategy stock right now is Michael Saylor himself, who's dumped $370 million worth of his own shares since the beginning of this year. So that's, obviously one person who thinks that the stock is overvalued. So I think that wraps it up for just about everything we've had to talk about in today's video. So as always, thank you all so much for watching, and we will see you on next week's video.